What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leveraged Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit the subscribe button and the notification bell. That way you're notified when we release our nightly videos and the one video on the weekend. But we also release bonus content from time to time, so make sure you hit that notification button so that you're notified when we release that bonus content. Make sure you're following us on X as well, where you receive real-time updates about our entries and exits on not only scalps and day trades, but mid and long-term trades as well. And we also offer further information throughout the day about like SOXL price action, the internals for QQQ, and just other information we think might help traders trade throughout the day. Just a reminder, we're not financial advisors. We don't offer financial advice, but what we do offer is our view of the price action for SOXL, not only in the current day and in the past, but where we believe price action will take us in the future based off of our trading and charting method. If you're not familiar with our trading and charting method, it is based in the STRAT. If you're not familiar with the STRAT, I encourage you to hang with us through the end of the video. By the end of the video, I'm pretty sure you'll have a good hang of it. And then if you would like further information, we've provided a link in our description to this video to this free PDF right here, which shows the basics of the STRAT. A candle can only be one of three things: a 1, a 2, or a 3. Based off of those, there are about 6 major reversals, which we like trading because they provide very clear entries and targets or exits. There are also continuation patterns, which provide very clear entries, but the targets are more up to where you believe price action will go based off of the STRAT and past price action. It does incorporate broadening formations, which are basically highs to highs and lows to lows, which show not only where price action, how it's expanding, but where there's a high percentage chance of where the action will take us in the future. So the STRAT, it's very easy to pick up. It's why the base of my trading and charting method is in the STRAT. But there are a few other things layered on top that we'll talk about throughout the video. So today, the agenda that we'll go through is a recap of Friday's price action real quick. We'll also take a quick look at the QQQ internals for last week. If you're not familiar with our videos, we use the QQQ internals as another tool, another layer in our trading method for information as to where price action may take us. And we'll then take a wide view of price SOXL's action from the week, the month, the quarter. Just real quickly look at those to make sure we have a wide perspective of where we're at. We're not too zoned in on the day and lower time frames. We'll also look at the market maker's expected move for the week real quick. It's very easy to find. Most trading platforms have this. You're just not usually aware of it. So we'll go over that, and then we'll get into setting our 4-hour markers and the triggers and targets for Monday, as well as the triggers and targets for the full week, and review the triggers and targets that we have for the month, the quarter, and the year. So should be, I don't want to hold you guys for too long, but we do want to get some good information in here. So should be a pretty quick video. So let's get started. Looking at the charts, we're just looking at the day chart first to see we had some very, very green price action. Got back above the week flip, so the week turned green, and for once again we were back above the year flip. So we were in full time frame continuity. If you're not familiar with our charting method, there is a link in our description to a video which goes into detail. It's called Precision Trading. It's in our bonus content. It'll better help you understand the color coding for the lines that we have and some of the major levels that we have on our chart. As you can see, we don't have a bunch of indicators and MACDs and SMAs and all of that. Trading should be very easy, right? Not overcomplicated. And price action is, once you understand price action, it's very easy to follow. And these broadening formations and a few trend lines from here and there, coupled with major levels of price action, those will get you buy. It will not just get you buy, but they'll help you be a very successful trader by not overcomplicating things. So I encourage you to check out that video on the bonus content. But just getting back to the charts here, we can see that we're still above this monthly downtrend line, just barely. the last few times that we've gone below it, that it's just been for, momentarily, and we've got back above it. So I do believe we are defeating this monthly downtrend line. The one thing that stays with me is the seasonality that we're coming into. September and October are seasonally the worst performing months for tech, so there is a chance that we're in this range that we've been in for 8-9 weeks now. Is this wick an indication that we're going to continue to range and pull back down and go back to the bottom of the range and test it to see if we might come back up? If we do that and the bottom of the range fails, we do run the risk of going back underneath that monthly downtrend line. We do have a gap that's pretty close here, so that kind of acts as a magnet. All gaps like to get filled. If that does happen, if price action does get us that low, that again flips the quarter in the month red as well. So that would make us full time frame continuity to the downside. To they would all be red: the year, the month, the quarter, and then the week, obviously, because it would push down, which gives momentum to the bears. So not only could this gap get filled, but there could run the chance of filling this gap as well. We do have this weekly uptrend line from that April 7 low, way back here, April, and then the further up in April we had a higher low on the week. So that is technically an uptrend line there. We have seen strong bounces off of this weekly uptrend line. So again, if we do go test the bottom of the range, do we do it quickly and bounce off of this weekly uptrend line to prevent us from getting back below the monthly downtrend line in the quarter and the month flip? That's a possibility, but we have to just right now continue to play it how it's been playing for a while, entering puts at the top of the range and entering calls at the bottom of the range. Whenever we're inside the range, we were kind of scalping a little bit more until it just we decided what direction it was going to go, up or down, and then we rode that momentum to that side, and then went ahead and reversed back down to the other side. So we've been using it to our advantage. This range that we've been in, it's no secret. Anybody who trades this and charts it knows that it's out there, and we're just waiting for a decision to be made. So still waiting to see if we're going to break the range to the upside or downside. If we do break it to the upside, we do have the weekly broadening formation that's going to keep us in check. Just real quick, let's go over the internals for the week, or actually let's look at the chart from the week real quick. Right, so if we look at it, we did get the 1 2 up 2 down reversal strat, right? We got the 1 2 up 2 down. It did not reach its magnitude, right? The magnitude is the low of the candle to the left of the 1, so that's this candle, which is the top of the gap as well. So we haven't tested that. We're caught by the weekly uptrend line that was established by this higher low right here on the week, and shot back to the top of the range. Now again, we did kind of wick above it and come back, but it is technically more of a hammerish pattern. Some would call this more of a doji, but either way, we've got a big bottom wick, so price did not accept to the downside. It bounced pretty hard off of the bottom there, so that does show a little bit more momentum to the bulls, because once again, this is a higher, well, if we go 2 up on the week, right, if next week's action goes above the high of this previous week's action, that's a 2 up, and that puts in a 2 down 2 up reversal targeting the high of the previous 2. That would be even more of an indicator for the bulls that this is number one, it would be a higher low here. It would lock in the higher low, but then we would see if we're going to go test this weekly broadening. If we do go and test it, it doesn't mean that we immediately reject off of it and go back to the downside. You can see this weekly broadening formation previously was here, but it was updated once a new one was created, right? It just rode the broadening formation for 1 2 3 4 weeks before it finally rejected off of it. So could we get a similar type of pattern with this fresher broadening formation that's out there? Do we bounce back up and then just ride that, maybe go to fill this gap and then come back down, that giving us a higher high once again on the week, possibly even testing this higher high? Who knows? We'll play it how we see it when it comes, but we will have our triggers and targets ready. And we'll go over the week's triggers and targets. Let's just look at things from an internals perspective, QQQ internals. We can see the upper left-hand part of the grid here is the movement for SOXL on a 15-minute time frame. We have the week's opening print right here, the year flip right here. The purple dash line is last week's 50%. This short purple dash line is last week's low. Again, if you check out our precision trading video, you'll have a better understanding of what these levels are. It may look a little convoluted here because it's on a real tiny chart, but once it's on a bigger chart and stretched out, it's not as hard to understand. But what it does give us is a quick reference to where specific levels are if we are on a smaller time frame chart. So if we're scalping or day trading and we're down here on the 15-minute, we know that, okay, we're coming up to, last week's 50% line in the year flip. We know that they've been resistance in the past. Just looking to the left, it was this full day and another day. So we would know just immediately off the bat that we have to watch this level for any types of reversals or at least sideways action. Again, same with these other levels. This yellow line is the last quarter's high. This green dash line is last month's 50% line. And you can see how those levels are respected intraday, right? They're not on there for just no reason. But anyways, you can get deeper into that in the precision videos, precision trading videos that we have. Let's move on to the internals, right? We've got the tick Q on the upper right-hand side. We've got the vol Q. The tick Q is just essentially, how many stocks are ticking up versus how many stocks are ticking down. Basically, every 3 seconds, I believe, is the tick. This is just a 15-minute chart, but you can see how Monday we rode the zero line, and you can see Monday's action was very flat. Tuesday started off riding the zero line, but we did have these drops down into even the trend lower zone on the underside, and we never really were above zero line. And you can see that Monday it was a down day, never pushed back up, as indicated with the tick, right? Wednesday we had action below the line for the morning, and then back above zero line in the afternoon. And you see we had the dip in the morning, and then the slow grind back up in the afternoon. It's basically the same types of things. You can look at it there. Let's move on to the vol QD. This is basically volume of money flowing in and money flowing out, right? So if above the zero line, more money is flowing in than out. If it's below the zero line, more money is flowing out than in. You can see Monday, it was not bad action. Never got to the trend higher zone of 400 million up here, but it was above the zero line. So relatively reflected in price action by the fact that because it never got to the trend higher zone, we never really trended higher. It did grind a little bit higher, but it just remained positive, so we didn't have any drops. As opposed to Tuesday, below the zero line by the end of the day, we were at the trend lower zone. That's reflected here, right? The trend down all day, the last candle being the red candle, being an indicator that the next day probably will be a red day because we ended in the trend lower zone. And what happened the next day? We got the push down. It stayed down, which meant that we had the push down, but the push up was more muted, right? Friday, look at that action, and that's why we had the big day on Friday. Up 10% on Friday for SOXL. So, or I just ended at 8.28, but intraday we were up 10% at one point. So that's indicated here by the volume of money going in right into the QQQs. Chips once again are a very big part of QQQ. So got to above trend higher zone very early in the morning and continued to push up, which is why the grind down was literally that, a grind down. It took a long time to push down, and even the push down wasn't that big. So you had your Friday afternoon sell off, which is typical, but money was flowing in. And then you have your ADQD, which is the breadth, right? The amount of stocks in QQQ that are getting green or red action, right? Is it very concentrated in a few stocks, or is it spread out throughout QQQ? You can see Monday it was very concentrated, right? That's why there wasn't big movement in QQQ. in SOXL. Monday there was it started out very even, but then obviously everybody was getting was going red, right? That if it was concentrated, it would stay more along the line because the breadth is less, right? The more breadth, that means the more stocks that are affected. So you can see that the middle of the week, right, we had negative breadth, even dipping into these trend lower zones at times. But the bounces up here are reflected also in the price action as well. And then Friday, obviously opening in trend higher zone and staying up there all day. So basically popping up during the day and staying up there. So you can see how this can be another tool in your tool chest when looking at the price action for SOXL. And yeah, especially if you're doing scalps and day trades, intraday type of stuff. Not necessarily something you want to use for like swings, possibly if you're doing like overnight swings, just because this starts over every night. This is price action from close the price closing price of the previous day. So yeah, that's how you'd read these internals and how it can be of use to you. So let's go ahead and let's look at our agenda real quick here. So we looked at our internals. Let's look at a wider view of SOXL. We looked at it from the week, so we know what we have. Looks like we're going to get a reversal back to the upside. If we look at things from the month perspective, right, we're back almost in force on the on the green 3 engulfing candle, right? So we had price action below last month's low, and then it rejected there, and price action back to above the high of last month, making a 3, which most people call an engulfing candle, but if you're in the strat community, you call this a 3. So we're almost back in force. The reason why I say we're not in force is because price closed within last month's price action. So if we're back above last month's price action, that's when we'll be back in force. So right now we're still trading this as an indecision candle. It explored below and rejected. It explored above and rejected. We're back inside, so it's indecision. If you're back in force in one of the directions, that's more of a decision, right? It had indecision, but it decides once you're in force. So if this were to go back in force and close in force, then we would expect that the next month should probably at least start out going green as well. But that's just how you would read that from the month perspective. Again, we are in the greater V-shaped recovery. We had the two down, two up, which then came into a combo two up. So that we had the 2 down here, the 2 up. The magnitude would be the high of this 2. It couldn't do it in 1 month, so it had to combine with another month to reach this magnitude. Once it cleared this magnitude, then that triggers the combo 2 down, combo 2 up, with the magnitude of the high of this candle, 3264. We haven't reached there yet. We'll see how this candle closes, this month closes. Again, we're coming into weak seasonality for tech. Chips are obviously included in tech, so we want to watch how the month closes. Is it going to be in force a 3, or is it just going to close a 3 of indecision, right? From a quarter perspective, we have the 2 down, 2 up that's triggered, right? We cleared the high of the 2 down, so we're targeting the high of the previous candle, which is that 36.15. Haven't reached it yet. We still got month and a half or 2 months left in the 1 month, left in the quarter. So we'll see how that continues, right? It's in force because we're above the high of last month, but we do have that wick above, right, showing that price action tried going up even further but is rejected. Well, it's off of that year flip where we've been having major rejections. So if we do reach magnitude on this 2 down, 2 up, right, the high of this one, that triggers the 1 combo 2 down, 2 up. Or if it takes 2 candles to reach this, it would be a 1 combo 2 down, 2 up. And the high of the candle to the left of the 1 is the magnitude for the 1 2 down, 2 up. So that's that 70.08, right? So that's why I like the strat. It gives you very clear entries and exits, right? With the 2 down, 2 up, the entry is once price goes above last month's high. The exit is once it reaches here. But if you use the combination strat, you can exit maybe 50% of your position, or even 75% of your position if you want, and then leave the rest to ride the combination strat, up to the 70.08. Not to say that would happen in a quarter or next quarter even. It may take a couple quarters. That's a pretty big magnitude to make. But we do want to see it at least reach the magnitude of the 2 down, 2 up. It would be nice this quarter. I don't think it would happen this quarter, right? I think we would need to get a combo 2 up using the fourth quarter, usually like the Santa Claus rally or something like that, to trigger it. Maybe go and even close this gap, then triggering the 1 2 down, 2 up. If we do that, then we can talk about that in the future. But for right now, we're just trying to see if we can complete this 2 down, 2 up reversal strat. Right? The year is what leaves us a little bit more mixed, right? We got the 1 2 up, 2 down. Technically, it has not reached magnitude. The magnitude is the low of the candle to the left of the 1, and that's 621, right? We reached that 723. So on April 7th, I believe it was, we got that 723, which is almost to the magnitude, but that still leaves it on the table. And the fact that the year is still red, leaves on the table that we could go and try and complete this strat by the end of the year. So you'll just want to keep that in mind. That's why we want to flip that year green and get that full time frame continuity to the upside, and really get that momentum going to the upside. Again, just talking about the year flip, how important that is. You can see that 2813, that year flip, it was rejection once, twice, 3, 4, 5, 6, 7 for a day, 8, 9, 10 times in the last 8 weeks since the beginning of June, or we'll say the beginning of July. Yeah, beginning of July till now. We've had 8 rejections at that 2813 level. So you can understand how important of a level it is by the fact of how much the bears are defending it, right? So it's going to be very important for the bulls to flip that green. That way, again, in this upper left-hand corner, we've got the time frame continuity indicators. We've got the day and the week and the month and the quarter that were green. If we can get that year green, we've got full time frame continuity, no more conflicting continuity, which gives us that momentum to continue to this upside, hopefully getting to this weekly broadening formation, either riding it up or, even breaking through it and continuing on to hopefully maybe close this gap and reach this next weekly broadening formation. So again, I hope all of this is making sense to you regardless of whether or not you know the strat or understand broadening formations, but I think they're pretty easy to understand, right? Just looking at them. If you don't have the strats reversals memorized, that's fine as well. Oops, what am I doing? Again, I have the documentation, some free documents available for you. Again, so we're just looking at, 1, 2 down, 2. Let's see what we got here. So right here we have the 3, 2 down, combination 2 up. It's a combo 2 up because the 1 and 2 had to combine to go above this, the high of this 2, and the magnitude is the high of this 3, right? So if we look for the 3, 2 down, 2 up, you have your clear entry at the high of the 2 down, and the target is the high of the 3, and that's what happened, right? We reached the high of the 3 and then a little bit above it, and price pushed back down. So you can see how the strat is very easy to use. I'm a very big advocate of it. There's a very big strat community out there as well. I've been using it for years. There's others that have been using it for years. Rob Smith, I have a link to his YouTube page as well in the description for this video. He's the inventor of the strat. Rob's a pretty amazing guy. Well, he was a pretty amazing guy. He's no longer with us. He's passed a few years ago. But I encourage you to check out his channel. He's got loads and loads of videos. He went through every single stock ticker in the S&P 500 with using this strategy to show you how it works. It's repeatable. That's why it's one of the things in the title of in the opening of this video. It's a proven and repeatable strategy, right? So people have been using this for years. Rob used it for years, and like I said, if you're not familiar with it, check out the documentation I have, but then also just check out Rob Smith and the strat on the internet. There's plenty of information out there for you. So we've looked at things from a wide perspective. Let's look at the market maker's expected move for this week, and to do that, at least on Thinkorswim, most other platforms should have this as well, but on Thinkorswim, if you go to the options chain and we look at this coming week's options chain, August 29th, 2025, and you go over to the right, you can see this number in parentheses, this plus or minus $2 or 2.521. That is the market maker's expected move with an implied volatility of 90.26, right? So we already know that SOXL is a high beta stock. That's one of the reasons why we started this channel. It's one of the reasons why we trade it every day, is because the beta or the volatility that it provides you every day, you're going to get good movement, which equals, if you're especially in options, equals high percentage moves in a direction for your premium. So whether you're going to exercise or if you're just going to sell premiums that or trade premiums, it's very beneficial. So we can see that this week there's a $2.52 move expected. So if we just look at our notes, I've already got it marked in. So these are notes for Monday, August 25th. These are from today on August 20. On Monday, there will be 87 trading days left in the year. The close price on Friday was 27.45. And we can see down here our expected move for August 25th through August 29th is $2.52. Right, that's this 252 over here, which leaves us with a range of 29.97 to 24.93. That's where the expected price action to be for this particular week. If we go look at our previous chart and looking at Friday's action on a more broken down perspective, we can see where we have those markings. So the high of last week's expected move was up here at this 29.74, which is kind of equal to the high of the previous week. And then our expected move bottom was down here, and it's this line right here, EM bottom. And you can see how price action, although it did break, it did come back within and then bounce back up, right? So they're not like end all be alls. It's not going to go below this and it's not going to go above this. There's like a 70% chance that it will stay within those, but there's like a 30 to 40% chance that it could go outside. So it's not an end all be all, but it's another tool in your tool chest to know that, hey, once we get to this level, there's a good chance, we may get a poke down, but price action will probably either reverse or at the very least move sideways. And that's what we got initially, is we got this sideways movement, then a big reversal. So that's how that comes into play. And we'll go ahead and mark those on this chart, 29.97. So let's move this one, edit 29.97 and 24.93. So not much difference from last week's expected move. And let's just check our other chart to see if we have that on it. Yeah. 24.97 or 29.97 and 24.93. Right, so that way we know, 24.93. If we're down in a 5-minute, 15-minute chart looking for an entry and exit, or an exit on a scalp or a day trade, we know that if we're zoomed in here, of course the chart would be wider, and we're coming up to this. Oh, we know expected move for the bottom is here. We could expect some price action. We could set a sell here, or know that we want to set up a stop limit. Once price action gets to this or below it. That's just another tool in our tool chest, right? Let's go ahead and remove the opening print for Friday. We don't really need. Well, let's just look at Friday's price action real quick on a more granular scale. You can see how it opened up above the opening print and above overnight high, so you could enter calls at that point, very early in the morning. On the 5-minute would maybe be better, 1 minute, but first target would be the previous high a day, which pretty much lines up with last month's 50%, and you can see that's where we got to, and then there was some sideways action. So you could have exited half of your position here and waited. Powell was speaking at this time, but you were back above these levels, and then we got that Powell started speaking, and price action shot up, and then where did it shoot up to? The year flip. Once it rejected off the year flip, it found support on what? Last week's 50%. Right? So there's very good reason why we have these levels out there. It might look a little overcrowded here because we're on even a 15-minute sometimes. This is a scalp chart, and even the 15-minute sometimes can be too much. But if you're looking at like a 5-minute or even a 1 minute, all of this kind of widened. Well, the price action on Friday was kind of crazy, but you would have something more like this, right? So it's a little more clear. We know this is last month's high. We know this is a daily broadening formation. This is the year flip. This is last week's 50%. We know this is the week flip. Expected move high for Friday. Last month's 50%. So we don't need to zoom out to understand what these levels are. We know the color coding, and we know the different. If it's a solid line, it's a top of a fib. If it's a 50%, it's the long dash line. If it's a short dash, it's the bottom, right? So we know all these things. Again, check out our precision trading video if you want to better understand our charts. So let's get you back into our triggers and targets for the week. We know what the expected move is. So let's go ahead and move our triggers and targets. I probably should have done this before the video. But let's take out our expected move for Friday. Let's take out last week's opening print. Let's take out the opening print for Friday. Let's take out our expected move bottom for Friday. All right, so that cleans things up a little bit. Let's take our previous high day and move it to Friday's high day. Let's take our 4-hour trigger to the upside and move it to the high of the second 4-hour candle of Friday. Let's take the 4-hour trigger to the downside, move it to the low of the second 4-hour candle. And again, these will be evident once we set our triggers and targets. And we'll move our previous low a day to Friday's low. There we go. Let's also move the week fib, which is basically just the high 50% and low of the week. All right, so we'll activate this and we will move it to, there's the high of last week, there's the low of last week. So if we're zoomed in on a chart, we know that this is the high of last week. That purple dashed line is the 50% and the small dashed purple line is the low. So let's get back in on our lower time frame and set our triggers and targets. All right. So we know that if we go below the low of the second 4-hour candle of Friday, that triggers a 2-1 2 down reversal. This is a 2 up, a 1, and a 2 down reversal. And again, reversals are what we like to play because they give us a very clear entry and exit. The entry is the low of the second 4-hour candle of yesterday, and the target is the low of the candle to the left of it. So we have an entry of 27.34. It's right here, 27.34, which would give us a 2-1 2 down. 27.34 is the entry. 25.34 is the low of this candle. So that's our exit. Very clear. You take price action from below that, and you're taking it to there. If it goes back above this, then you can stop out. You stop out for even or maybe even a slight loss. That's better than a big loss. No, you didn't win, but you live to fight another day. And if price, is doing some chop initially, or some type of fake out action, then if it goes back below 27.34, you can re-enter, targeting 25.34 and just ride it on down, watching for lower highs and lower lows and just continuing to ride it down. So very clear entry, very clear exit. Now the great thing about a 1, although you never want to make a move on a 1, so the second 4-hour candle of yesterday, if you're looking at things from a 4-hour perspective, you wouldn't have done anything because it was a 1. But it does offer a reversal in both directions, or a reversal strat. So this, if we were going to the upside, because this is indecision, it would be a 2 up 1, 2 up reversal. So very clear entry at the high of this candle and the very clear exit at the high of this candle. That's just a strat, and that's where the high percentage chance of price action will go. So the high is 28.02. So we have our trigger of 28.02, and the magnitude, or the first target, is 28.32. So 28.32. So not a lot of magnitude there, right? Only 30 cents. If you were going to play that, you probably want to load up on contracts. That way, if you needed to get in and out, if price action stops here and reverses, you could get out and you could still have some type of decent profit. Wouldn't be great profit, but if you have multiple contracts, you can do that. Maybe even leave a runner. But this gives you a lot more magnitude. So we're not hoping for downside action necessarily. But if we're just looking at it from a perspective of how much money you could make off of a 4-hour trigger, I would like to the downside first, right? That gives you basically $2. Well, not basically, it gives you exactly $2 of downside movement. That's a lot of premium that you can gain, whether you're selling contracts or trading contracts, right? So those are triggers and targets for the 4-hour. Now, remember, the triggers and targets for the 4-hour are kind of unique because they roll into the triggers and targets for the day. The day triggers and targets, could roll into the week, but not necessarily, because the triggers and targets for the week are much wider than the triggers and targets for the 4-hour. So because they are a reversal, the downside and the upside, the magnitude of the magnitude of a reversal on the 4-hour is always going to be the trigger on the day. So this 25.34, if we do reach it, and say we go to 25.33, technically that triggers the day. So if we look at things from the day perspective, let's go to the day and let's bring out our better chart. So if we trigger that to the downside on the day, that's a 1, 2 up, 2 down. That's another one of my favorite reversals because it usually gives you a little bit more magnitude because the entry is the low of the 2 and the exit is not just the candle to the left, but the candle to the left of the 1. So the exit would be the low of this candle. So we have an entry here of 25.34, right? 25.34 with the magnitude or an exit of the low of this candle, which is 23.66, right? So that gives us, another $1.50 of movement almost. So we do like to give ourselves some extended targets as well, just because in this case the low for the day would trigger the. Actually, we need to. I don't think I set these levels. We'll see here in a second. But in case it does reach this, we do have some extended targets here. The 22.95, which is the low of this candle. So if we breach the low of this candle, that flips the quarter and the month red, which would make everything red: the week, the month, the quarter, and the year. So you probably get some momentum to at least the bottom of this candle, which is 22.95, and our next extended target is the bottom of this candle, the 22.57, which is the top of this gap. Now remember, the top of this gap has been support twice already, so it would not be unreasonable to expect another bounce off of the gap, but it's not what I would bet my house on, right? The gaps like to get filled. So if we do reach this for a third time, they say the more times you hit a level, the weaker that resistance or support gets. So there's a good chance we could just dip into it and close the gap. We can address that when we get there, but that's at least the second extended target. The from the day perspective to the upside, we would no longer have a reversal because even with this 2 down combo 2 up, it reached that magnitude, right? Because technically this is a 3 2 down combo 2 up, which again, if we look at those strats, very clear entry, very clear exit. So the entry was once price action gets above the high of this 2, the exit is the high of this 3. So it's run that strat, so it's reasonable to expect price action to come back down, which it actually did. So if we do get price action back to the upside, it's just a continuation pattern at this point, a 2 up, 2 up. That gives us a very clear entry, but we have to use our judgment on where price may go, right? So the 2 up entry would be 28.32. So we have our 28.32 here, and our targets, we put 28.71, 29.66. So this 29.66 is, 28.71 is the high of this candle. Not a lot of magnitude, so probably a good chance we would reach it. If you really want to make a stretch, that could then trigger 3 combo 2 down, combo 2 up strat. Again, it's kind of a stretch, but it technically would be what it is. So you would target the high of this candle, which is a 29.66. So we have our trigger, and then our extended targets of 28.79, 29.66, and then we also have the 35, which if you're familiar with the channel, we'll go ahead and bring out the major fibs level. Oops, not last year's run up, but if we look at the 2020 to 2020 low to 2021, well, technically 2022 high, it was the first week of 2022, right? If we draw Fibonacci levels from this low to this all-time high, we have 30.55, which is the 61.8 level, and you can see how it was, resistance for at least this month, and then it was kind of support, a little support. We blew through it, and then it became resistance, a little bit of resistance there, support, a little bit of support before going through it, and then it becoming resistance, and then really getting that drop and possibly being resistance again. But either way, it's a major level, so we have that as our extended target here, right? Actually, I think I did update my weeks. Let's go ahead and bring up the week. Let's go back to our right. So on the week, we did trigger the 1 2 up 2 down, but again, it did not reach magnitude. So is it reasonable to expect it could, push back down again next week to complete this strat? Possibly, right? We don't know. We'll play it that way if that's the way price action wants to go. But for right now, it's looking like we'll probably get the 2 down 2 up on the week. So yeah, yeah, the two down, two up. Yeah, give them 200. Okay, yeah. So we do have our levels updated for the week. I thought I had forgot them, but so if we were to get the completion of the strat, right, that would have to trigger by breaking the low of last week, which is that 2366, right, which so happens to be the magnitude for the day. So if the day triggers to the downside and it reaches magnitude, it then will actually trigger the week. So the week would be a 1-2 up, combo 2 down, triggering at 2366 with the magnitude, again, of the low of the candle to the left of the 1, which again is on that diagram if you're not familiar with the strat, and that low is 2257. So we have a magnitude of 2257. So if tomorrow, or I'm sorry, on Monday, price action breaks below 2734, there's a high percentage chance that we get to 2534. Now, do we get the break? If we get the break at 2534, do we go and reach the 2366 in one day? I don't know. That's kind of a stretch, right? If we're starting out at 2734, unless we get a gap down to start out with, $4 of movement is a big movement for SOXL. If we look at Monday, we closed at 8% movement, and that was only a $2 move. So that would be double that. So that would be like a 16% move on the day. Not to say it can't happen, because SOXL, a lot of times I say, when I'm talking with my friend who trades with me, if SOXL runs 5%, it can run 10%. If it runs 10%, it can run 15%. If it can run 15%, it can run 20%. I usually stop at 20% because there's not many times I've traded SOXL where it's gone over 20%. Now, in 2020 and 2021, there were a few times that it did have days over 20% movement, but 16% movement is big movement. So do we get the roll of the 4 hour into the day, into the week in one day? Probably not. But that leaves the beginning of the week open for a pullback to possibly 2257. If we do get that, that actually would trigger the month back red, a bearish engulfing candle, right? 2257 is below 2358, and it technically has a magnitude of 1604. Would we reach that by the end of the month? I don't know. Sometimes they say you take the stairs up and the elevator down, so it could be a quick enough drop, hard enough drop. We could reach that 1604. So we got to keep in mind that although we have pretty bullish structure, making this, if we go, it looks like we're making a higher low here. We've got to keep in mind there's still plenty of downside open, right? We've been moving sideways for 9 weeks, so a decision has not been made from a higher, weak perspective of which direction we're going to go in. So just keep in mind we still got plenty of downside, and it can trigger very easily, right? And this is where the elevator down comes in, right? The day triggers the week, or the 4 hour triggers the day, which triggers the week, which triggers the month. That could all happen in 1-2 days. It doesn't happen quite as fast to the upside, right? It can, but we know that it can go to the downside, right? So we're in this range. Not much else to really say about that. We've got our triggers and targets. If you've been with us, you're familiar with a lot of these levels, especially on the week, like that 30-55 to the upside, as well as the month, the quarter, and the year, because those haven't changed over the last at least month. Quarter hasn't changed for 2 months, and the year hasn't changed all year. So those are pretty solid. We know where they flip, right? If we're just looking at our notes real quickly, we know where the month flips, we know where the quarter flips, we know where the year flips, and in what direction they would flip. We've got our expected move for the week. Again, expected move high would be up here, expected move low would be down here. So again, it looks like ranging action. Even if we do get to the high or get to the low, it's still within the range we've been in for the last 9 weeks. So there's, again, opportunities to the upside and downside. We've made money to the upside and downside. If you follow us on X, you've known that you followed along and you've seen the money that we made to the upside and to the downside, which includes Friday, which we made money to the upside, and we did actually make a little bit of money to the downside when it pushed down after peaking, right? So we did, just based off of, it was a more high risk play, right? It didn't nothing triggered to the downside. It was a more high risk play, but it was based off of action that we have been having, right? So You just take that as your own trigger, is knowing that it's a higher percentage chance play. Keep a tighter stop so you're not putting a lot of money at risk. And we made money to the downside, and that was that. So upside and downside action, which is what this strategy provides, and based off of these triggers and targets. So I hope everybody enjoyed today's video. I think I went over everything. Let's look at we've gone over everything for the agenda. Hopefully I didn't keep anybody too long. I hope everybody is happy with the video lengths. I hope I've kind of cut them down. I know at the beginning they were very extended, and we got into a lot of detail. But if you do want more detail, if you want me to do longer videos, let me know in the comments. But if you did make it this far, go ahead and give us a like. It really helps the channel spread. Again, we're not selling anything. Anything we do provide is free. We just want to spread the word about SOXL and the benefits it provides, especially from an options perspective. High beta to low theta, low premium with high beta on the underlying ETF. So gives a good recipe for great opportunities out there in the market. And we also like to promote the STRAT, and more specifically the little bit twists that we put on top of it to make our own trading method. If that can help anybody trade out there, again, I believe it's probably the easiest way to read price action without overcomplicating things, even though it can look a little bit complicated at times. But if you just look at it from a high level perspective, you can see where price is moving. Where there's a high percentage chance of it to go. So if that can help somebody else trade out there, I'd really appreciate the thumbs up to help that spread that out there to other people. So make sure you hit the subscribe button, notification bell. I don't know, we'll probably release some more bonus content here pretty soon. We've been working on some things in the background, so we do pride ourselves on just being a one cut video, not a whole lot of production and all of that type of stuff. So there's not a whole lot we do in the background, but we are trying to provide a little bit more value than just the everyday and weekend breakdowns. So we might have something out here for you here pretty soon. With that, I hope everybody enjoys the rest of the weekend. If you're watching this, Monday morning, I hope you're getting it in before the market starts. Even after the market starts, this video should be pretty valuable because we go over the week and month triggers and targets as well. But I hope everybody has a great weekend. I hope they get some great rest, and have a great trading week next week.